When the Chinese markets falls, it has repercussions for the U.S. market. The Chinese stock market has been hit badly by U.S. tariffs which came into effect in July, which are making it more costly for companies to operate there, prompting China's central bank to pump money into its economy. In turn, China has hit back and imposed tariffs on up to $60 million worth of U.S. goods. But the White House said it would respond to any retaliation from Beijing with more tariffs on Chinese exports, as President Trump is placing pressure on China for what he considers unfair trade practices. However, this ongoing trade war has had a negatively impact on the China stock market, and on Tuesday, the Shanghai Composite Index fell by 2.9% and sent negative ripples through world markets. China stocks are now down 12% in October and 26% over the last 12 months. Historic analysis has shown when Chinese stock falls, then U.S. stock is generally weaker. A study by CNBC showed over the last 10 years, when Shanghai stocks fell 10% or more in a 30-day period, the U.S. stock market was up only about 30% of the time, and U.S. indexes averaged significant declines. The poor performance of the Chinese stock market has had a negative impact on the U.S. stock market. Image, Getty. For example, the S. In terms of individual stocks, Goldman Sachs stock fell 10.6% on average over the 30-day period and was higher only 18% of the time. Caterpillar revenues are closely tied to China, and it was down 7.9% on average in those periods, with gains only 20% of the time. DuPont lost 9.3% on average, and was higher just 17% of the time. China markets. The Dow Jones has been pushed down by the Chinese stock market. Image, Getty. These reductions pushed the Dow further down on Thursday, falling more than 3%. Stocks of companies that produce commodities and materials were down 84% of the time when China shares fall hard. The SPDR Material Select Sector lost 7.8% on average. The XLF, the Financial Select Sector SPDR Fund, lost on average 6.4%, was up 31% of the time. Energy stocks, represented by the Energy Select Sector SPDR Fund, lost an average of 7% and were lower 20% of the time. China markets. China's stock market has performed badly since the U.S. imposed tariffs. Image, Getty. The poor-performing China stock market has had a run on basic commodities, like oil and copper. As much as 8.3% was wiped off copper, 8.5% off oil on average in the 30-day periods. Crude oil was down nearly 7% of the time when Chinese shares took a tumble, and copper was down 78% of the time. However, gold rose by 0.6% and the dollar index was up 1.5%, both were higher more than half the time.